Hello guys, just checking in with yourself to see how you're doing. Basically, what I wanted to cover today was I wanted to take a look at the gold market. Now, this is a daily chart. This is a daily FX charting platform, which is pretty nifty. And what we've seen that the market has been trading slightly sideways. So after towards the end of August and moving to September, we started to see a nice strong move to the upside on expectation of quantitative easing. Now that came out and confirmed, and we saw a lovely boost, but there was no follow through. We've seen that the market seemed to be sucked in, so retail investors were sucked into buying once the news was finalized from the Federal Reserve that they were looking to buy more mortgage-backed securities. But we didn't see that follow through as the market had expected. What we saw is a sucker punch where some form of divergence were occurring, which basically means that a market will push in one direction to suck in retail investors before we see a flush of those positions. So a prime area to see that is generally when you have a divergence of some sort. And that occurred. That occurred when the market actually topped out, and then we heard the news with the unemployment rate had drastically decreased, bumped down to 7.9%. That was a massive surprise, and then we just saw a sell-off, because obviously due to the sell-off was that the market was recovering, which means maybe that the Federal Reserve may cut short their quantitative easing. So we saw a proliferation in the market where we saw sell-off, which occurred and which bounced and tested about the 1673 level before we saw a covering effect occurring again. Same scenario which occurred at the top, but now it's occurring from the bottom side, and this was a nice buying opportunity as a bounce, a dead cat bounce, as they say. And the market showed some strength in the market, and we saw a bit of a push from about 1670 lows to about 1750. So about $80 move, which was pretty good. Market topped out at about 1750, and then we saw a bit of a sell-off that's tested just above the previous lows. Now it seems that this lows has been tested about 2 or 3 times, and it seems to be holding from this support trend line. The bounce has occurred. If you go to an 8-hour time frame, we can see clearly that there has been another bounce, a bullish divergence occurring, where certain traders that were looking at going short at these lows have been caught to the downside, and we're now seeing some buyers coming back into the market. So short-term targets in this trade would have been this previous trendline support, which is now a resistance. If the market can get through this trendline resistance, we could see a potential test of this trendline resistance here, and then the market would pause. But it's all really now, the market seems to be focused on the whole fiscal cliff, whether there will be some form of resolution before the end of the year or not. So the market seems to be tentative. There seems to be a lack of buying strength to the upside, and time will tell. So anyway, just wanted to give you a quick heads up and analysis, and just be aware going into next week, guys. We've only got about a week and a half to go before the Christmas festive period commences, and there'll be a lot of light volume. So just be aware. Anyway, have a fantastic weekend, and I'll speak to you soon. In the meantime, just pop along to my site, smartforexeducation.com. Speak to you soon. Bye bye.